So my go-to framework is to have like one sentence, what this project is about, and then say, these are the three pros and these are the three cons. And the cons are equally important to the pros.
The story you tell is so important. It's like having that steak presented to you with the mashed potatoes just flopped right on top of it, or it's sitting right next to it with some piece of greenery on the plate and it laid in front of you very nicely, right? It's the same meal, but man, how it is presented is so important. Our guest today, Peter Pomeroy, is going to help us understand just how he does that. He's worked in both corporate, entrepreneurial real estate for over 20 years in investment, development, construction, and brokerage. And during his tenure, he's worked with multiple product types, including apartments, single-family homes, office, warehouse, and land. His experience across different real estate product types and different geological markets gives him a seasoned perspective to identify sound investment opportunities. I've known Peter for a couple of years now. We met at a conference a while back, and so just need to hear where he's at now, what he's doing, but how he's growing as well. He's going to help us to think through that story and how we're communicating with investors. He's also going to get into his biggest challenge over the last year and why that's so important, and also some structure to his morning that he lays out in great detail that will be helpful for you as well. Peter, welcome to the show. Just getting to read a little bit about you. I mean, you have a vast level of experience in commercial real estate, to say the least. And so grateful for your time and willingness to just share some of that with the listeners and I today. Give us a little bit of that backstory, though. And so we can know, the listeners and myself can understand a little more about you. And then we're going to dive into some of your specific specialties and our expertise.
Sure. So thanks for having me on the show. So my background is pretty diverse. And in many ways, I feel like it's been about focusing into a product type that I like for a host of reasons. But very quickly, after business school, I went to work for a large general contractor in San Francisco and did a big rehab and really liked the construction side, but I also wanted to be on the owner side of the table, and I wasn't quite sure how to do that. So I went to work at Colliers as a broker, which is not getting on the owner side of the table, but it felt like it was getting closer. And so I was a broker at Colliers for a number of years, did well, enjoyed it. My focus there was on office leasing downtown. There was some investment and development work that I also did. And and when I did that, I really liked it. So in 2007, I left Colliers just as the economy was kind of going skyrocketing up to work for smaller investment development companies as like an investment manager, or development manager on their projects. And with them, I bought deals and sold deals and did a lot of kind of entitlement work for housing in the Bay Area. So along that way, we lost an office property in Cupertino, California. And it was just all about, bad timing. It happened just as the financial crisis happened. And so that was a pretty painful experience. I had a lot of sweat equity in that. So that set me back a little bit. And so, got back up on my feet. In the process, got a W-2 job because I had to, have insurance and all this stuff, kind of back to stability. Did that. And then, then I went back into real estate and did more of the work for these investment development companies. And along the way, I got to do a massive heavy lift of a apartment building in Northern California. And I thought as I was doing that project, wow, this is such a resilient product type as compared to the office product type. And I need to get more into this. And I just didn't know how to do that. I didn't know that there were educational platforms on the internet. So I didn't even know to put that in the internet to look. And then, so I did more work, some multifamily, some office. And ultimately, I connected up with Neil Bawa's boot camp. I really liked him. He's in the Bay Area. He thinks in a way that I like, and did that. And then that just kind of led to getting deeper and deeper into this space, this kind of small middle market multifamily space that we're in. And I think probably many of your listeners are in or contemplating.
Yeah, no, it's awesome. Peter, I appreciate just going through some high level stuff there of your background, and Neil's been on the show numerous times a while back, and we've talked about lots of different things. So great guy, I always he call himself the mad scientist of real estate.
The mad scientist,
something like that. So he is somebody that definitely goes into the details, and we can learn a lot from him. But I wanted to move back a little bit, and we don't have to spend a ton of time here, but that project, you said you lost a lot, and you even stressed it's very painful, right? It was a project that was very painful, but you know what? I mean, what stuck out to me there is that you even went and got a W-2 to get back on your feet, right? And to keep the ball rolling at least. But then you got back into real estate.
I did.
Could you speak to just the thought process there a little bit, or maybe even influences from family or friends or a spouse, or those things that are saying, "Wait a minute, Peter, you remember what happened?" And then you're going to go do it again. Was there any of that? How did you? Because there's probably listeners also that are thinking, man, I've already messed up on the first deal, and I don't think I want to do it again. Or maybe their spouse didn't want to do it again. Or what did that look like?
Yeah, that's a really good question, and I didn't. That's a good one. I didn't plan for that. I think that it created a lot of strain, and in that strain, there was a lot of trade-offs that were made. So we lived in the San Francisco Bay Area, and after having put a lot of work into this one particular endeavor, and it just kind of like dissolving, for everybody. And it wasn't, due to bad choices. Nobody could have predicted Lehman Brothers would go under, and then all these tenants would just stay in their existing places. But nonetheless, that's what happened. So I did. So as part of the trade-offs, we agreed to take a break from real estate. And I said, okay, I'll do that. I'll get a W-2 job. And I was really fortunate to get hired pretty quickly. I didn't understand a thing I was doing in this new job. Like even conceptually, it was difficult. And that might be all about me. It was a software as a service company. And then later I would work for employee benefits insurance company. And that was actually quite interesting, but nonetheless, I wanted to get back into real estate. So in terms of part of the trade-offs, where we left San Francisco, we moved up to the Pacific Northwest, where my wife at the time, her family lived. We did a full regrouping there, kind of got back on our feet, if you will. And then once that happened, I realized it was time for us to move back to San Francisco. And I knew that I would want to get into real estate again, despite trying very hard to explore and be excited about a different industry, which isn't to say that I'm not capable of, let's say, leaving real estate and doing a different industry, but I wasn't capable and ready then. I was still completely focused on my goal. So, then the bargaining happened again, and we moved back to San Francisco, and, I kind of put my toe into it. And then the economy was different, and I was able to get these kind of longer term consulting jobs that provided, some sense of steady income versus big pops at milestones. So it was a little bit different in terms of my compensation. And so that's what I did. And that worked out, but it's not been at all an easy process. And I'm happy to say it. It's been an incredible experience. And there have been some wins and successes, and wow, I didn't think that was going to happen. But, there's also some low points for sure.
Sure. Yeah. Well, I appreciate your transparency and just making it real, right? I mean, it's, it's not easy being an entrepreneur. It's not easy, in real estate in general. But I mean, it's an amazing path, for those that are willing to keep getting back up, right? I hear it so often on the show, and you did that. You're a great example of that. But I want to jump into your expertise, and we talked a little bit about it before the show, but you talked about understanding the investment and the investment story. Walk us through what that means a little bit, maybe the importance of that, and then let's dive into how.
A lot of my investors, and I'm going to think about the investment story from when I'm presenting to investors. But you do the same thing with you're presenting to a bank who's going to give you a loan, or a KP or other GPs. And so, the first step is to really know, the market you're in and the investment, and know it in, as much detail as time will allow, because, obviously things get moving quickly. So then it's almost like I digest the investment, and then out comes like a thesis, a high level thesis statement, that if I'm meeting with, say, a CEO of a public company or somebody who has a big job, a lot of times that's where they want to start, is the one sentence. What is this about? Why is it good? Why is it bad? And from there, you support your thesis statement with the analysis that you've done, which might be, well, rent comps, operating, all of the kind of categories that fall under that. And, that's how I was trained just in my life in jobs. I didn't mention, I worked at Deloitte for a while, and that was almost like going to business school all over again, but, in a super applied way. And, they taught me a certain way to like present something, not that I do it all the time or anything, but, and I've found that to be very helpful and works stylistically with me. But yeah, so there's this investment story and then all of the pieces that fall under it. And usually when I'm engaging, whether it's with a LP, potential investor or GP, I love it. And frequently it's a lively, engaging conversation where people will say, I don't believe that, and then you get into the engagement. And for me, that's just a great deal of fun because one, I know they're interested. And two, it's just, for me, it makes life a bit more fun than, oh yeah, we'll invest, no problem. I know it sounds odd. I like it. I like it a little challenging.
Speak to that investment story, just the importance of the story, how you come up with the story, what's important to create the story for investors. What does that look like? Or maybe, research that you've done, or I don't know, things you want to include every time.
In terms of a framework to identify the investment story, I don't have that yet. So I don't have a framework, a matrix, that kind of thing. But what I do is I really try to, you've heard this analogy, is peel the layers of the onion so you get to the. Wait a minute, were you an onion farmer? You were a farmer at one point, right?
So I trained horses.
Yeah. Oh, horses! All right. Yeah. I just remember, from side note here, from 2020 when we first met. You were talking about the farm and so forth. So,
oh yeah, that's fun.
Yeah. No, I love it. Anyway, so the idea is to get at the essence of this investment. So we have an investment that right now we're taking to market and we're raising capital for, and this investment is like its investment thesis is something along the former owner renovated 20 units and is already achieving our projected rents. We will renovate 40 more units in a simple, straightforward way, and deliver returns, accordingly. So it's really, it's kind of a vanilla investment thesis, but that's the deal itself. Now I might present it with a little bit more sizzle, but understanding that, this investment that I'm referring to, it's not the heavy value add. It's not, lights flashing, exciting. Well, there's could be a big conflict and this, that, and the other. This is do the repetitions over and over again, i.e. improve the units, do it in a timely way, and then you'll achieve your returns and be successful. Whereas we were raised or partners on the property in Tucson, Redondo Tower, and that's a 9-story, 96-unit apartment building. And just by virtue of being 9 stories, it has a lot of kind of exciting elements to it. It's a retro building. And so there's a lot of aspects to that property investment and just the asset itself that can excite people into wanting to participate in it. I hope that helps.
Are you a real estate investor looking to break into the multifamily investing space? Have you heard of MFIN Con happening in Charlotte, North Carolina, June 23rd through the 25th? The Multifamily Investor Nation Convention is a place to learn from over 60 plus high-level apartment investors and also to network with over 700 investors. If that's not enough for you, Shaq, yes, Shaquille O'Neal, Barbara Cochran, and Jocko Willink will be live and in person speaking at this event. Be sure to secure your tickets to this live in-person event as the tickets are going fast. You can even upgrade your ticket to the VIP to have the opportunity to rub shoulders with these high-level speakers, including myself. After their session, Jocko Willink will also be attending the VIP party on Friday night at the event. So go to mfincon.com to find out more details. There's also sponsorship opportunities available too. For details for this event and to purchase tickets, visit mfincon.com. Use promo code LifeBridge to get $200 off your tickets. That's mfincon.com.
Yeah. Thinking about the parts that excite people to want to invest in. And of course, we want to be as transparent, honest, and all those things. But man, thinking about how something's presented makes a big deal, right? Or a big deal of difference. Makes me think about, like that, you get served at a restaurant, everybody's thought about this analogy before, but have you really, and how you present a deal, it's like they bring out that steak and potatoes. If they just throw the potatoes right on top of the steak and hand it to you, it doesn't look near as good to to you, right?
Right,
as opposed to, if it's presented well and it's set on the plate well, maybe there's a something green on the plate as well. Like how it's presented makes a big difference.
And I will say there is a framework. I do have a go-to framework, but I think I misinterpreted your question originally. So my go-to framework is to have like one sentence, what this project is about, and then say, these are the 3 pros and these are the 3 cons. And the cons are equally important to the pros because I usually say, like, for example, and it's really a risk. So here's a risk is that our rent projections won't hit what we projected. And, they're 10% less. And then I usually then say, and this is what, if that happens, these are some things that we would do about it. The second one that's like popular right now or relevant is our CapEx expenditures are 15% higher and take, longer, 20% longer to like execute on the interior unit improvements. And so this is what we can do about managing that risk. So I really focus on like first, like kind of the positive aspects, and then equally the risks to the investor. And I found that one, that relaxes everybody because I'm not just saying, hey, it's going to be great. And two, I often can learn a lot about how an investor thinks about, risks and reward by just listening, once I kind of get that out.
Yeah. Listening is a crucial component as well, right?
Yeah.
So what about any other ways that you then communicate with the investors about that deal or through that investment story that maybe I haven't asked you?
So, we talk, I have one partner, John Fowler, and we are, hand holding, and I mean that in the most positive, respectful way with our investors. And we're doing that because a lot of them, they may be sophisticated investors, have, large net worth, but a private investment in a piece of real estate is a much more relational thing. So investor Joe, if he has a concern for any reason, he's going to call Peter and want to get a hold of me. And my guess is he may call on a Saturday, maybe not a Sunday, but a Sunday maybe. And I don't need to get back to him within the hour if it's a weekend, but I need to get back to him. So I think our investors expect that kind of concierge service, if you will. And that's what we deliver. We're not at a point where we have so much kind of investor velocity through, say, our online presence that we can hire an investor relations person who kind of goes through the basics. I'd love to get to that point at some point, but that's not where we are yet.
Yeah. Well, what's been your biggest challenge over the last 12 months, Peter?
Focus. This is, I swear, Whitney, I'm on this like spiritual journey to focus and let go of things and focus. And in all aspects of my life, that would be a longer podcast, but I had done some entitlement. I liked how on multifamily, and then I got to do this small 23 unit gut and redo apartment building that worked out. But when I, in about 2019, late 19 or 20, and when I was like, okay, we're doing Northlight Growth Properties, it's me, we're focusing on apartments. Then all of a sudden it was like, well, maybe we should consider warehouse because I have experience in that. Oh, and I've got experience in office. I could do a small office. We could do medical office, so it's less risky, et cetera, et cetera, et cetera. Meanwhile, time is just going by. And so, I had to let go of all of those other shiny things that are like good investments. And frankly, we could do them and let go of all those things to focus on apartment buildings, value add apartment buildings, the ones like everybody else is going after, and then try to differentiate somehow in our approach. But yeah, it's been focus. And also, this might be helpful for some listeners is in that process, I had partners kind of come and go. And, and we're still all great friends and everything, but it was just because their interests became more clear to them, and their interests were not necessarily apartments. It was, ATM machines and funds or development. So, there's this process that you can't control of bringing people in, and we're all still trying to figure out what we want to focus on, but you have to go through it. And then I think that, when I was finally like really dogged in, I don't want to even think about anything else but apartments. That's when we started to get more traction, both as in the product type. And then also we were like, we're going to focus entirely on Phoenix and Tucson. That really helped.
Yeah. Focus. It's the shiny object syndrome sometimes, right? That a lot of people refer to. And yeah, focusing on, like you said, whether it's asset class or market or whatever, man, it just, it can make things a lot more simple, right? It can help you to move so much faster. No doubt about it. And I was thinking through that. Is there anything that's helped you as far as focus? Because I think like it's a big subject, but maybe maybe there's something that's helped you to think through, man, am I focused in this area, or how have I decided what to focus on specifically?
I think the motivation to focus was like, not to sound a little bit over the top, the motivation was through pain and suffering. Because when you're, even if you're like, oh, I work a lot of hours and all this stuff, you're like, for me, I was not getting stuff done. Like I couldn't see the accomplishments, measurable accomplishments. I wanted to see them. And so that frustration led me to realize I need to let go of doing a build to rent project in Austin. And we could have done one and probably would have been good, but that was outside of our kind of circle at that time. And so in terms of what kind of got us focused, I think we had to we had to go through some partners, and not in an acrimonious way, but like when a partner leaves who's been working with you for a while, like everyone's bummed out, and that's just how it is. And so I had to go through that a bunch of times, and it's just exhausting because again, it takes away from a desire to focus on a product type. And we'd love to expand into other like options, but our view is until we do 10 apartment buildings in in the western part of the U.S. ideally, after we do that, we could maybe introduce to our investors who will be more seasoned a product type that might be very similar to apartments, but is a little bit different, and then we could explore other options that way.
Yeah. No, I appreciate that. Your transparency as well through that, Peter. All right, Peter, a few final questions, but tell me, what's your best source for meeting new investors right now?
We're finally kicking off our CRM marketing campaign. And so it's still too early to tell how that's going to investors who might be interested in this current project, or just generally want to have the get to know you call, how that's going to materialize. But I'm making a big bet on that. And so we're going to be, myself in particular, producing more content, getting on, podcasts like yours, Whitney, and, start sharing our story. I think that I would say that I've there's a spiritual process to real estate investing, which I think is like another great topic for a podcast. I'm a believer. And so I integrate my faith with my work like very tightly. And so I had a belief that I needed to find my voice. Peter, find your voice. And I'm not even entirely sure what that means, but it does mean, getting on podcasts and, asking at a conference, hey, let me speak for 5 minutes. I promise not to mess it up. But the point is get out there, speak some and experience the, the crashes. And when you do, you're humble, you get back up. That's the spiritual part, right? And then, keep at it, because I feel like that's something I need to do. And that will lead us to, investors and KPs and other people. And, that's for me, one of the greatest things about the real estate is that you meet all of these different people from different backgrounds. And I mean, it's just terrific. And in many ways, it's a byproduct of the pandemic where we're all on these Zooms and meeting this way. And I'm not grateful for the pandemic, but I am grateful for like this aspect of the pandemic, Zooms and meetups and all. Yeah.
Yeah. What it sounds like too is, you're willing to be uncomfortable, right? You're willing to get out of your comfort zone, and you even see the need to make that happen. I remember that very well for myself. It's like, man, the first time I was asked to speak at a meetup, I just remember thinking, oh my goodness, but I knew that I needed to commit quickly or I'd probably back out. Right. So I just said, I'll do it. And then it's like, oh boy, what am I going to talk about? And then trying to prepare for that. But that was the beginning of, much more than I ever imagined as far as speaking and whatnot. But it's incredible, just your willingness to get out of your comfort zone, because we all have to do that. No doubt about it. Peter, what are some of the most important metrics that you track? It could be personally, professionally, or both, maybe one.
I use OneNote as my kind of to-do tracker. Mm-hmm. And, it's kind of big, it's got pages, and it's a little bit complex. And then I actually just use kind of like one page, which is basically a to-do. And again, what I like to do is get all my to-dos, put them under categories, then try and figure out which categories are not that important, which ones are important, both important in terms of like immediate results, immediate benefit, and important in terms of a benefit down the road. So an immediate benefit might be, I call Whitney and I chat with him and tell him about this investment. And he's like, great, thanks. A longer term investment might be, I'm going to do a blog. I'm going to do blog posts now. I'm going to do one every week or whatever it is, and putting that time to do that work and literally shutting everything off and doing it. And then just having faith that over time, benefits will come.
What are some daily habits, Peter, that you have that have, say, produced the highest return, or disciplines that you have?
All right, I'll tell you exactly. So, and this works for me, and everyone else is going to have a different program. But my best days are, I get into my office. I probably get in here around 8, and I do this thing. It's the day one diary, and I have a template in there, and it's called my daily practice. And the first things are, I identify 5 things I'm grateful for. Then I identify 3 things that giving to God. So for me, that's very important. But, it could be just things I'm letting go of or accepting. And then if I have the time, I might read the Bible a little bit, but not so much lately. And then I write out a prayer, because I must be ADD, because when I say a prayer, I tune out and stuff. So I write it out, and I try to follow a real simple format that, kind of is like gratitude, a petition that's like, oh man, help me out here, I'm nervous. And then the final one, which is the one that I've been really working on, is almost standalone, is some sort of statement of faith and confidence that it'll happen. It's going to happen. And, that's part mindset. It's also, from my Christian purview, it's also very biblical. And so that's what I do. I do that. And I don't do it 7 days a week, but there's a lot of weeks where it's 5 days a week. Yeah.
Yeah. I appreciate you sharing. I love it when a guest can just say, hey, here's some habits or disciplines that are helping me. And this is exactly what they are. That's incredible. What about Peter? How do you like to give back?
And I'd say I'm not giving back as much as I would like to. But one of the things that I've done is, so I went through a divorce. It was a very unpleasant divorce. I don't know of any that are pleasant, but nonetheless, it took me to my knees. So every once in a while, through like a friend or whatever, my friends know about that this was a challenging time. They'll connect me with somebody who's starting to go through that, or in the middle of it, or on the tail end. And I will, I'll make myself available to them, and over text, phone, or whatever. So yeah, so that's the way that I give back that means the most. And I would like to continue doing that.
Yeah, that's awesome. It's often those hard times are where, man, we gain so much experience, and not always wanted. However, it does help us to help others who are experiencing the same things, right?
Yeah.
And so appreciate you being willing to share that and help others in that way as well. Peter, I'm grateful to have connected again and to have had you on the show and to go through just some of your expertise around the investment summary, how we present that story of our investment, how communicating that with investors, some of those things that you do around that. And just your willingness to be transparent and step out of your comfort zone. I think, man, it's just crucial in almost any business, right? Any entrepreneur, and you're doing that. And I think you're a great example in that for each of us as well. Tell the listeners how they can get in touch with you and learn more about you.
Sure. I mean, probably the easiest and best way is just my email, peter@northlightgrowth.com. Northlightgrowth.com is also our website. Or you can go obviously on LinkedIn and hit Peter Pomeroy and shoot me a message. So those are the best ways to get a hold of me.
Thank you for being a loyal listener of the show. Please subscribe and share it with your friends. We want to help you become the passive investor you've always wanted to become, but also the operator you've always wanted to become. We want to be the #1 resource for your real estate investing journey. But go to lifebridgecapital.com, where you can start investing in real estate today.